Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good weekend, everyone. Ira Epstein of Lynn & Associates with your weekend agriculture update for this Friday, the 17th of March, 2017. Now remember, on the weekends, instead of daily charts, we look at the longer term charts. Typically, when I'm doing markets during the week also, as you know, I'll bring up a longer term chart to give you an idea of what's going on. But I drew a pattern on the monthly soybean chart for you and began that pattern, I have to tell you, a couple of months ago, actually. And look at what the market's doing. These pattern numbers are holding. Admittedly, we are down now to the support zone, but the market held it. That number comes in around $10, and that's right where you're at. Break out under it, and maybe you go down a lot lower, maybe even take out these lows that we have in place for the year. Break out to the upside, the opposite. Maybe you come back to the highs. But as you're narrowing in on this apex, it gets very interesting. The next thing that I want you to do is look, these are weekly closes. This is an area chart of only closes, but on a weekly basis. And as you can see, you keep dropping down here, and you've finished out this week at 10, but you can see you're making lower highs and lower lows, so you're in a down thrust. When we look at a weekly chart and just the bars, you've gone from 1080 to 983 and finishing off this week at the $10 area. When we add swing lines, which is a study that I wrote because I want to be able to define trend and risk. Let me define that. In a downtrend, you make a pattern of lower highs and lower lows. That is the definition as I define a downtrend. To break that pattern, you'd have to get over 1063.5 right now. So if you were to sell this market short right now at $10, knowing nothing else and only using the swing line, your risk would be 63.5 cents. When I look at the market for resistance and support, some of the things that I do is I look at where key moving averages are. And I think the 18-week and the 100-week are two very important averages. Some people will throw in a 50 or a 45-week, whatever, but these are big numbers that traders look at. We have not recently gotten back down to the 100-week, but when we challenged it back here, it didn't stay under it very long. It wanted to stay over it, and so on and so forth. Eventually, when you cross these numbers, as you'll see, markets have a tendency on longer-term charts that, you know, it takes time to move the Titanic because these are 1 week at a time, and that's the key. But if it were to break, 969 3/4 is one support, resistance back up at 1023 3/4, the 18-week moving average. A great number that I use with these type of charts are Bollinger Bands, these black dashed lines. Bollinger Bands are an algorithm designed to keep the market trading within them 95% of the time. You don't want to go to 100% because you'll never hit the top or bottom band. But when you hit these bands, what I teach in my charting course is this is where the pros are most likely taking money off the table. I am assuming they are long because when you're over the 18-week moving average, you're only looking for potential buys. That doesn't mean you were long, but that's my rule. When you're under it, you're looking for potential sales. And assuming you got them, this would be the support zone, in other words, an area to come out of the market, an area to come out. Where's neutrality on the chart? The 18-week moving average of closes. If you're under the 18-week, you have downside bias. If you're over it, you have upside bias. Yes, there's more to it, but I'm really giving you some of the gist that you need. I then add market momentum on the slow stochastics. Now, the weekly slow stochastics do not operate as good, in my opinion, good in quotes, as the daily. They're number one, much slower by their own definition. Dailies, I really like more, but they do their job here too. And if you believe, as I do, that momentum leads price, the momentum is still pointing down. Therefore, the bean market still has a problem because the momentum is pointing lower. In the meal market, we had a market that's got lower highs, lower lows. So we've got the swing line trend down. It's fighting because prices are over the 18-week moving average of closes, so they have an upside bias. When the two fight each other, I have nothing. Momentum, pretty flat here in the 50s. That's all I can say. I don't see anything else there. The reverse is true in soybean oil. We have lower highs, lower lows, bearish, under the 18-week, bearish bias, objective 31.90, the 100-week moving average, because it's right there. It hit 31.83. It's done its job. And momentum locked into the bear side. There's nothing at all bullish here. You might even go to 31.56, the lower Bollinger Band. In the corn market, prices fell back and under the 18-week average, and they got to 353 this week. Therefore, they took out 355 3/4. You ended an uptrend pattern. Here you had been with higher lows, higher highs. Now you drop down, you take that out. So now you have a higher high, a lower low. You're over both the 18 and the 100-week moving average of closes, but, and there's a but here, you have no trend. In addition, the market is working off an overbought condition because you have a 72 reading on the slow stochastic. I consider any number over 70 is overbought. So I view a market that's caught right here between, let's call it the upper Bollinger Band, the 18 and the 100-day average, and we have to see if it can do anything with that. In the wheat market, you came down, you made a lower low. You've got lower highs, lower lows, but what's that line in the sand? That 18-week moving average, it's held it. So again, no trend on the weekly chart because the swing line's down and you're over the 18-week. Momentum in this chart is corrected, past tense now, the overbought condition it had. So it's looking for a reason to do something. Even if it takes out 441 3/4 and makes the higher high, you still have a lower low and a higher high. There's nothing on this formation that can do anything. In the cocoa market, you've lost the embedded reading. In other words, when prices lose and come out of being embedded, it occurs when the red line gets over 20. You see it did it right here, but the next week it fell back. The next week it's still under, and you lose it this week. When that occurs, unless it falls back right away under 20, which is not often, the odds favor price and the 18-week moving average are going to come together. That's the way that I explain it. It's much more dynamic on daily charts. In the sugar chart, I think today was a super important day. I think the pros were selling the market all week, and I think against the 1780s, they lifted their shorts. And late in the day, we had a heck of a rally. We actually went from 1750 to over 18 1/4. It settled right here. The trend is down, it's oversold, but you've hit your objective. And when you've hit these objectives before or on the upside, you often get reactions. That's all that I can tell you. I can tell you what the past did. In the coffee, you've got a pattern of a lower low and a higher high. No trend. Market's under the 18-week average. Should it decide to lift up, I'd look for resistance at that 18-week number. In the cotton market, you have a market that's called riding the upper Bollinger Band. Notice how it just keeps staying against it. It's not closing over it. Only 5% of the time do you do that. But when it does this and you've locked in this type of momentum in the market, and if we take a look, how many weeks do we have of being over 80? Only one. You're overbought, but because you've stayed here for several weeks, the odds of a big price break start fading away. It means that there could be support because as traders are caught on the way down, there's no reason to be aggressively shorting it. You're over the 18-week average. I'm not saying it can't happen. I'm just pointing out what looks like it. The cattle market on the daily charts looks friendly, but on the weekly chart, it's a big nothing. You've made your higher high, you got a lower low, you're trying to hold over the 18-week moving average. Close under 114.90, this chart would be ugly, but let's face it, that's almost 400 points away. That's not going to be easy, and momentum has corrected itself. I don't see anything there. In the hog market, the daily chart looks bearish, the weekly chart looks bullish. You keep holding this 100-week moving average of closes, but momentum is turning down. And if you believe that momentum leads price, as I do, you'd have to be a bit cautious here. But the trend on this chart is up, but it's also overbought. So I put that all together, and what I try to do is teach this. Now, I believe that if you give me a couple of weeks, I can teach you this technique in a way you will understand. How I do it is by videos. And what you're seeing here are the different chapters. I start off with PowerPoints. Then I walk you into charts, actual charts, so you learn how to do it. How do I do that? Well, there's 54 chapters. They're built one on another, and there's some repetition by design. I learned in college many, many years ago, and I went for other degrees along the way, that before you turn a page, understand what's on that page. Why you cram is because, now that I'm much older and I understand it, is because you're trying to get, gee, what was I weak on? What if you understood what you were weak on right at the beginning and then got help with that so that you weren't weak on it? Then the testing becomes nothing. That's how I teach. Understand swing lines. Then you're going to get moving averages and the like. To back it up, it's not just videos where I leave you alone. Each morning, I record a video for you that reviews 40 charts, and I review all these different parts and hammer it home. Then I hold live webinars. Now, this is a charting course that I think is very sophisticated. I redid it again, and I do redo them every couple of years completely. And when I redo them, I'm teaching you all the things I've learned again, what I think I can teach better, new things that are hitting the market, how do you deal with high-frequency trading and the like. My videos look like that. Well, here's what happens. You're going to get the charting software, $100 value, assuming you haven't used our charting software before. You're going to get access to my market research for 30 days. The videos are going to be there. What happens now is between all of that, you have a support team. You have me. You can always call me and ask questions, and believe me, I answer the questions. Courses like this go for $1,600. Then they say, now I'll give you a deal at $1,000. My course used to go for $179.95. I took it down now to $89.95, but I'm offering a special. If you type in Ira 15 on the page, it'll say coupon, another 15 off. $74.95. Alone, the charting software and the research, about $160. You can get to that page if you're watching me on YouTube by clicking here. If you're not and you're looking at the video, it says www.iraepstein.com. Go to the website, click on education, drop down to the charting course, and you'll see a facts page and all the other parts so I can explain in a video, explaining how I teach, what I do. $74.95, you might want to invest in yourself. I'm Ira Epstein. You have a great weekend. This coupon will not stay up very long. And here's the other thing, folks. I will be raising the price of the course again. So I'm going to go back to that $179.95 price. Take advantage of these discounts. I'm Ira. You have a great day.